Alright, I'm hitting start stream now. Alright, I just posted the link on my page if you want to share it. There we go. There we go. Now I got some people jumping in. Just gonna give them 1 minute here. How are you doing today? Hold on up here. It's not picking you up here. Give me 1 second. Oh, you want to talk again?
Test.
There we go. Sorry, I had it on. I had it set to my speakers before. Like I said, you came in through my headphones today for some reason.
Yeah. All right,
But at least we fixed that before we started.
Yes, exactly. Well, good. Lots to talk about.
All right, sorry, there you go. All right, so first thing we got to get into is obviously this rate cut. You know, I've been saying forever they weren't going to be able to cut rates according to all this data, and you know everything has been revised. A lot of the things are incorrect data. If you look at the actual situation that's going on, you now have over $1 trillion in interest payments a year. Unemployment's been rising. The job numbers are fake. You know, nobody can afford anything in the housing market. You have 401k withdrawals at an all-time high. Credit cards are at an all-time high. People's savings account are at basically nothing, and their idea to make it easier for people like that to get loans that are already over leveraged, firms that are already over leveraged to get more access to loans, just didn't seem like the right idea to me, because obviously what's going to happen after with inflation and everything. But what are your thoughts on the rate cuts?
Yeah. So I mean, this stuff has been telegraphed for years. So like it's not a surprise. Obviously, the thing that was the Fed has this thing called the dual mandate, and the dual mandate says that they have to care about both inflation and unemployment. And the issue they had was that they had hiked very aggressively. That put severe strain on the financial markets, the banks, and their mark-to-market losses on their bond portfolios. And it basically meant a deleveraging event for Wall Street. And the bigger issue, as we've talked about before, is that the federal debt is in no sign of shrinking. And the problem is when you have been financing your debt at, say, 10 years at 2%, and you raise rates dramatically, and 10 years are trading at 4.5 or whatever there, then your cost of financing long-term debt has over doubled. So they can't sustain. They were pushing. The Treasury was pushing all their financing into the short end, but that was basically like, well, we hope we can lock in longer-term rates at a lower rate at some point. Well, that depends on the Fed. So the Fed's sitting there going, well, the optics look terrible. We just ruined our credibility because we said inflation was transitory, and it wasn't as transitory as we thought. We had to hike rates. So now we can't really start cutting rates while inflation's still above 3%, which is their de facto target. They don't have an official target, but 3% is the top of their band, de facto. So anyway, they finally saw inflation creeping down, but it was staying just above 3%. It's like, oh, come on. The bigger problem was for them that employment was ripping through like every month, the non-farm data, jobs data would be significantly higher than all of Wall Street forecasts, not just one or two firms. Everybody on Wall Street was getting it wrong month after month after month. And you see 3.78, so better than 4.5. But the issue is, it's like, yeah, the Fed can't cut when they see strong employment data like that. And whether the BLS is incompetent, or whether the seasonality models are no longer applicable, or whether the immigration situation was distorting things. I think it's a bunch of all of that. But anyway, it's like the notable effect of 2 months ago, and they revised, or a month and a half ago, BLS revised the job numbers for the previous year down by 800,000. So that would explain why Wall Street was always wrong in their forecast, because the BLS model was pumping out an extra, whatever, 80,000 jobs a month, or 70,000, whatever it is. But the fact is that the economy wasn't as strong as the data was indicating. I said, okay, maybe we should actually start looking to cut, because again, it's Wall Street needs it, because you had all these regional banks that were screaming because they have bonds in what's called a hold to maturity portfolio, but they also have bonds in securities portfolios, and the security portfolios were getting massacred. And so the ones that had to sell those bonds for liquidity, whatever, Silicon Valley Bank or whatever, that's what caused the dominoes to start falling. Is like they don't have enough capital because their assets, they borrowed short term and they invested long term, and the long term investments were crapping out. So anyway, the Fed had to cut rates. So eventually they've been provided the window to do so. Now the interesting thing here is that for the last, as we've talked about the last few years, it's like the market was saying, yeah, Fed pivot, and then Jay Powell would pull the rug, and no pivot at all. It's like we're still staying high. He did that for like a year and a half, and so the market was like, okay, here we go again. But this time it's different. And in Jackson Hole in August, he basically, Powell said, yeah, it's time for rate cuts. So it's like, no more bullshit. He's going to have to cut rates because, again, the federal debt and Wall Street need it. Is it going to be inflationary? Yeah, that's something we can get to in a sec. But so 25 was sort of what all the eggheads on Wall Street, the PhDs, were thinking. But traders had other ideas, and they were pricing in more and more aggressive cuts. So before the Fed meeting, the market was actually pricing in 150 basis points cuts by year end, which would imply 350 basis point cuts. Standard guys were saying, well, no, Jay Powell's going to go by 25. If he does more than that, it sends a panic to this market. Well, so he did go by 50 instead of 25, and his comments were unilaterally dovish, and yet the market hasn't really gone into a panic. It's like, yeah, thanks for doing what we wanted you to do. So it looks like now we're still about 75 to 80 basis points priced in by end of year. So we would expect another 50 basis point cut at the next Fed meeting. So yeah, look at equity markets. So people commenting, the Fed's aggressively cutting when equity markets are near all-time highs. What gives? Now, recall when we've had these conversations a year ago, I kept talking about the reverse repo account and how it was going to be a slush fund and how it was going to prompt up asset markets. Well, so the reverse repo was at $2 trillion when we were saying that. Now it's like about 100 billion. So that's almost $2 trillion of slush money that's gone from the reverse repo back into markets since we started having these space calls. So, or whatever you want to call this call. So yeah, that's why the equity markets are elevated. Now the cuts are probably, there's someone asked me about this earlier the week. It's like it's not cut and dried. Normally Fed rate cuts suggest, okay, this is good for equities because it's going to imply that the economy is going to have a softer landing and faster to reverse course and go back up. So that would be an encouragement to equity markets, and it's obviously an encouragement for bond markets because rates are lower. So if you held bonds, you got a good capital gain. But the question is, if we're already near all-time highs, and is this Fed cut really that good, or is it more needed? Like, how bad is the situation? How bad did Jay Powell leave it? Did he leave it too long? And so is the economy going to crater? There's a lot of people, on Twitter and everywhere else, all the FinTwits are basically saying, yeah, like we're look at these job numbers are not real. It's a fake economy. Everyone's working 2 or 3 gigs to eat. But yeah, like people are getting laid off. All these jobs that are posted are ghost jobs. They don't really exist. So all that kind of stuff, and again, you got to be careful about what you believe on the internet. But sum total is the economy doesn't appear to be as strong as it was meant out to be. So probably we'll see those cuts happen.
And
Now,
one thing though, Peter, too, like one of the things I do bring up a lot for to support that as well is if you look at the GDI and the GDP spread, it's just going farther and farther and farther apart as they're revising numbers. So it's like one of them's lying. Either GDP numbers are or GDI are.
Yes, absolutely. Yeah, if basically if you're creating jobs but you're not creating any GDP out of it, are these real jobs or are these like government jobs? Like, are they no productivity jobs? And the U.S. is has a very productive economy. It's like if you're seeing job creation in the U.S., unlike Canada, which is a basket case when it comes to productivity, but in the U.S., if you're creating jobs, those should be predictive jobs. And if they're not, then are those jobs actually real?
Exactly. And see, one of the things like you were bringing up or just talking about is like I was telling people, if they cut rates and everybody looks at it and sees, a fake economy, fake numbers, they see it's, leading into a recession, maybe to prevent a recession. They see, the country isn't doing even close to as good as they, like you said, they might go into a crater effect. The other thing is with that debt, it's going to be harder to renew these. So one of the things I was going to ask you about, they have 7.6 trillion renewed, and if you're going to lower rates before that, what happens if trillions suddenly were like, no, I don't want to renew it at all, I just want to cash in my bond.
And this is the issue is like when you're saying yeah they're lowering rates, how are they going to attract buyers? It's always a question of relative value. It's like a reverse beauty contest. Who's the least ugly? So if yields in Europe are going down and yields in Japan are staying zero and China is injecting liquidity and cutting rates, so even though the U.S. is cutting rates, it's still higher than anywhere else. So you may still have people saying, yeah, I'm reaching for yield. I'm going to keep buying U.S. because everything else is even worse. In fact, Bank of Canada has cut 3 times already this since June. So the Canadian rates are on track to be on the Fed's aggressively starting now. But Canadian rates versus U.S. is still attracted to go into U.S. And this is the issue with the carry trade story. And so again, it's complicated. But if you're cutting rates in the U.S., that should make U.S. investments less attractive, which means you should stop borrowing elsewhere and investing in the U.S. You should reverse that trade, which is what we saw in August, of course, August 7th. J.P. Morgan says, well, 75% of the carry trade was unwind was done. That's bullshit, of course. They have no idea. No one knows. But I will say, like guys like I think it's Just Dario was his name on Twitter. He keeps pointing out, it's like, yeah, there seems to be some sort of managed event going on in Japan where the carry trade could be continue to be unwound and just Japan's injecting liquidity to stop dollar yen from plummeting below 140. So anyway, all that to say is like, yeah, like the U.S. is less attractive as an investment, but compared to everywhere else, it's still top of the dog. So unless the Fed starts really cutting fast, and again, the market is pricing in fast cuts. So you could be right. There could be a buyer strike that comes at some point. It's like, yeah, I don't want your 30-year debt at this rate. It needs to be much higher. And that'll create a currency crisis or a debt crisis. It's like, yeah, and again, the Fed is aiding the Treasury in trying to manage this monstrosity that they've created, and it's just not that any other country is all that fiscal austerity disappeared for 20 years ago apparently, but it's like the U.S. has got to do something about their debt. The level of the pace of debt accumulation is insane, and nothing that from I don't agree with the politics too much, but nothing either candidate has suggested is going to arrest the debt problem. So as it means you will have an issue with lower rates. Is how do you attract capital to support these debt sales if your rates are not longer term rates are not attractive enough?
Well,
And
on
we
top of
did
that,
see
it's
that.
adding risk because other people are starting to see the data. They're seeing the problems with the Fed. They see the problems with the economy, and they know that you're not doing it for the right reasons. So I mean, other people see that as well too.
Yeah, absolutely. Now this is we got to address this now because I know you're chomping at the bit. But so isn't cutting rates inflationary? Isn't this just self-defeating? Isn't people going to use this extra leverage? Wall Street's going to take the extra leverage and go do more stupid shit. And aren't people going to buy now, pay later? They're just going to renew that, and they're going to oh, I paid down some of my credit card debt, but now it's whatever. I got a bank loan on my home equity, so I got more money to spend. Isn't this just going to feed inflation again? So is this inflationary? And normally, I would say, yeah, there's probably a good risk of that, based on what we saw in 2021, 2022. Now, the corollary to that, or the opposite to that, is I've talked about this a few times on Twitter. People need to pay attention to what's going on in China. Boss Blunts was all over Evergrande, and it didn't seem to blow up, and so people sort of faded that whole thing. But it's a big deal. The property market in China imploded, and who got left holding the bag? Unfortunately, Goldman Sachs and BlackRock mostly got out. They took some hits, but the main people that got killed were the Chinese retail. Now, if you look at how the Chinese system is set up, Chinese retail is stuck. They can't, even in their internal markets, they don't really have easy access to Chinese equity markets, which haven't been doing great anyway. But so China, either they find a way to find a relative and send their money offshore, which is what explains a lot of the property boom in Vancouver and other cities in the west coast of the U.S. And it's just Chinese money flowing in and buying property, and they're going into Toronto and Montreal, and Canada's markets are probably inflated a lot because of that Chinese money flow. But if you can't do that, then you're stuck. Well, you're buying gold and silver, which is why gold and silver is popular in China. So the other thing most people were doing in China was investing in property. Like, yeah, my savings of all this magic wealth that China created over the last 25 years was to funnel into the property investments.
And most of
So
it is in Canada, and that's one of the major problems in Canada over there, actually.
yeah, exactly. So if you were able to get your money out of China, because a lot of people wanted to get money out of China, then they got it into foreign real estate. But if you're stuck in China, a lot of people in China are stuck with their money in China. They invested in Chinese property. Now, what happened with Evergrande, and you see these videos on TikTok or whatever, huge blocks of buildings being demolished because no one lived in them. They were half completed. They never finished. And who takes the hit for that? Well, the Chinese regional banks, but a lot of it was like, I hold it into retail investors. Hey, you buy timeshare in this property, or you buy a piece of this property. The Chinese retail got nuked. So basically, there's no purchasing power in China. All the wealth that was created, a lot of it was tied up in property and has been nuked. So if you look at what's going on, and there's no retail demand for goods in China like that. I mean, there is obviously people still buying iPhones and trying to buy EV cars and stuff, but the given the population, there's not there's no huge cohort of people with lots of money to spend. They're all being frugal. And again, you look at industrial inflation in China, it's been negative for 2 years. So the industrial sector in China is suffering. That's deflation. Then they'll be, and as they devalue the renminbi, that will be exporting deflation, as they did in the late 90s and early 2000s, which is why we had that magic period where inflation never went up, because China was exporting deflation the entire time. So I think what may happen here, as China continues to grapple with this, and there's a whole population demographic issue too, which I won't get into, but it's fascinating. I always mention this guy named Peter Zahan on YouTube. He's a bit of a quack, but he has some interesting comments on demographics. But problem is that China just doesn't have the demand, and so they'll be exporting deflation. So in this event, if the U.S. is cutting rates, but everyone else is cutting rates, it's the dollar will stay relatively strong, and that will prevent that inflationary impact of the rate cutting. So again, it's not guaranteed, but it may be a big offset. So the Fed can get away with cutting because they see the rest of the world is imploding. And that's the point I've been making, and that's why I've been so bullish on gold and silver, because when you have a situation where real rates are going down, and gold and silver do not pay interest. So normally I say, well, I would invest in gold and silver when I can, I get a dividend from the stock or whatever. But the whole thing is predicated on interest rates. And if interest rates are zero, well, then there's no backlash against gold and silver. And that on a relative real value, gold and silver go up. And people on Twitter keep posting these charts about, hey, this is the value of your house in gold and silver versus this is your value of your house in nominal. And you can see in gold and silver terms, if you bought with using gold, then the value of that gold would have been much better than it. So anyway, it just comes down to the fact that over time, if real rates are low or negative, then gold and silver are an attractive investment. And that's what I think will happen here if the Fed keeps cutting. Because, again, if we have a deflationary world, then real rates will go negative again.
No, and I mean, I agree with you. I've been talking about gold forever, and it's like that's, everybody sits and they have their money in banks, and it's like, no, for like the last couple of years we've been talking about gold. Like, I know you've been high on silver, and I've been a lot more higher on gold, but I just feel like gold, the central banks are
Yeah.
going to have to keep buying it because a lot of these fiat currencies are going to fail. And one of the things I went over, we'll get into that later, but one of the things I went over last time is they have their system installed now for 41 of these firms. And it's wholesale CBDCs that are, cross border into their own internal system. And one of the things that, I thought was interesting is so one of the things I talked about a long time ago is if they run out of options, what they'll end up doing is they tried to make retail CBDCs and we went fucking nuts about it. So what they'll do is they'll make wholesale CBDCs, but they're gonna make them special. So they'll have the central banks will print them out, whatever, and then they'll have those backed by assets. So they'll be different though, backed by the dollar. So they'll hold different value as long as they keep crushing the currency. They'll still have their assets value through this new wholesale CBDC that they're up here. Let me show you. Are you looking at my screen?
Yep, got it.
It's right here. So they joined this BIS tokenized cross-border payment project Agora. And if you come down here, It talks about how it's now going to be tokenized deposits of assets that will turn into wholesale CBDCs from 7 centralized banks. They'll be on unique ledgers. They'll be backed by different stuff. So those assets, as they're crushing the dollar, the rich will still stay rich. The criminals will still not, they'll have their assets over here.
Yeah. And this is analogous to what I've been saying for years. It's like you're going to have a reset, and the reset is going to be some sort of tokenized asset-backed currency. Or the digital currency, yeah, that's probably the way it's going to go. So, it's like you're going to have it backed by commodities. Or this is what the BRICS are talking about too, right? You'll have basically a tokenized system where you've got some unit of account that's backed. It's a digital tokenized system, but underlying it is, instead of a bar of gold, it'll be like one millionth of an ounce of gold or whatever the hell they're going to do. But you can create a basket of commodities and then basically create your CBDC based on that. And that's where I think the world's going. And the time frame is uncertain, but it's certainly it's on us. And if this is the BIS doing it, you're going to get buy-in from most.
Here's the participants list here. If you're looking at my screen, here's the participants.
Yeah.
Here's all 41 right there. If you want to look quick.
Yeah, and I mean most of them looks like
J.P. Morgan Chase, Citi, BNL Paribas, Deutsche, all the criminals.
Yeah. I mean, and this is the problem with all these institutions. It's like they do a lot of shitty stuff, and I'd be the first to say that. J.P. Morgan is guilty of a lot of crap. But the problem is like they're it's institutionalized system now. It's like I mean, even if you had like drain the swamp, you're never going to get rid of these things now. It's like they're so institutionalized into the global system. You would need a reset that would be a complete reset, and I don't know what you would replace.
The only way to do it too is, like I said, but you would have to bank run those specific 3 banks. It's the only way to do it. They'd have to lose all their customer deposits, which is their lifeline, and that's the only way to do it.
Yeah. Until then, they basically will be part of everything that comes. It's basically I'm going to go geeky here. So, if you know Lord of the Rings, before Lord of the Rings, there was called the Silmarillion. And the idea was that Sauron's boss was a guy named Morgoth. And Morgoth wanted to rule the world, but he basically said, look, I'm going to infiltrate my entire essence into the world. So anything that is created in Middle-earth will be tainted by my presence. And that's basically what JP Morgan and BlackRock are doing. You will not be able to do anything in the future without them having some involvement. And so
proof of that is what they did to crypto, made their own exchanges, then it was okay.
Yeah, no, exactly. And that's the problem. It's like they are guilty of a lot of shitty shit and maybe you get one big fish. Maybe like Larry Fink makes the wrong enemy and someone goes after him. But the problem is you're never going to get rid of the institution. It's insidious, and I've sort of come to that. You get like a flame out like Credit Suisse, but the system behind Credit Suisse will not change significantly. That's the problem. So I mean, I would love to be around for 50 years and find out exactly what Credit Suisse was up to, but realistically, most of us will be dead by then. So that's the problem. It's just anyway, it is going to happen. We're going to go to a digital currency. It's going to be backed by some kind of. You need something to back it up. Whether the bigger problem is, and people have had this argument with me. It's like Okay, well, it's backed by physical. Well, how do you know? How do you know if there's physical? And that's a fair point. It's like people were talking about SLV to me yesterday. It's like, when's SLV going to go up? And I said, well, when are they going to do an audit? Do we actually know how much silver SLV actually has? Because they haven't let an audit happen. And JP Morgan is the prime participant in the SLV ETF. So JP Morgan can manipulate that thing at will. And, based on JP Morgan's track record, they apparently don't do an audit of their own vault. So they have rocks for nickel. I mean, God knows what they have in silver. Maybe it's painted lead. Maybe it's not even painted. Maybe it's just, who knows? Maybe it's whatever, fool's gold. Who knows what's in there? So that's the problem. It's like there's all this junk anyway. So there's a big issue in terms of, okay, well, you create this CBDC and it's backed by commoditized or whatever it's backed by, but how do you know what it's backed by actually exists either? So it's all going to be trust me, bro, and that's a problem. You're either going to have some very specialized auditing people that actually know what the hell they're doing to look at these things on a specific basis, or you're just going to be trust me, bro, and it's not going to be much better than fiat. I'm really hoping it's the former, not the latter.
Well, yeah, the problem is with that is all the top auditing firms are sitting there continuously getting fined for doing, improper audits, looking the other way, letting things go by. So it's not like you're gonna find an auditor that's true too. They're just gonna bribe them out.
And that's a huge point, right? I mean, China is now basically telling Price Waterhouse to get the hell out of the country because of the Evergrande debacle. And the funny thing is, I'm old enough to know that I had friends that interned at Arthur Andersen while Enron was still around. They didn't work on Enron file, but it's like Arthur Andersen was this most respected auditing firm until Enron, and then Arthur Andersen basically was culpable for that whole bloody thing, and so the firm doesn't exist anymore. So they used to be the big six accounting firms, and now they're the big three. Or it's like they're gonna, and Price Waterhouse is probably gonna go poof soon. So, the problem is it's like just like the rating agencies, the auditing firms have lost that like, oh yeah, we're totally above this all. We're just impartial. No, you're really not impartial. The auditing firms for FTX was clearly not impartial.
Just like rating agencies.
Exactly, just like rating agencies. And the rating agencies, I think, are being actually sued. I can't remember who's suing them, but is it the SEC? I can't remember. But yeah, like the rating agencies, it's a joke. I mean, 2008, obvious, and The Big Short made a big deal about how bad the rating agencies were. I mean, that was a great part of the movie. It was just showing how self-interested they were in basically rubber stamping all this shit. And so the fact is that even since 2008, they've still been able to exist, and they're part of my world. I can tell you, and I don't have anything against the people we talk to, but they definitely have reputational issues to deal with, and so will the auditing firms. So, and then that's the thing. It's the underpinning of the financial system is that, yeah, these are financial statements are true and accurate. Well, how they're not, they haven't been true and accurate, and just like everything else we've seen in the markets, it's all fugazi, it's all BS, and that gets us back to the BLS numbers. But I mean, how do you screw up 800,000 jobs in a year, BLS? Anyway, so I'm getting very very cynical in my old age here.
No, you should. I mean, seriously, like, okay, look, you read my post the other day because all this is true. He said U.S. So we'll get a little bit more into Powell here because it was great to see the reporters actually grill him with great questions, and he had no answers. We'll get into the real estate here in a second, but like one of the things that they talked about was the economy, and then they brought up all these things. Well, most of these things. But one of the things I'm looking at too is like, so the spot here to say, we'll get all that in a second, but here, one of the things that they're talking about says the U.S. economy is in great shape. We have $1 trillion plus interest payment. Revised jobs it was 880,000. The spread gap between GDP and GDI is moving otherwise. Commercial real estate, you see that bomb. And that's the thing, like, so to compare this to, like 2007 and everybody talked about like, the mortgage-backed securities and all that. The commercial real estate is worse than that. It's not even close. It's at almost to $1 trillion. So it's way worse than that. And now you're cutting rates just like you did. So you're kind of setting it up like that. On top of that, it says people that were working, and this is one of the things that she said to them, people that were working, she goes, people are working two jobs at the all-time highest level. Credit card debt is at an all-time highest level. People's savings, it came out last week, or last couple months, I mean, people have lower savings now than they did on average than they did before COVID. Rising unemployment rate, housing market, hardship withdrawals. So she brought all that up. So, and then she said, like, like, where is this strong economy? And then she brought up, like, before we didn't understand inflation, and now we kind of get it. Can you explain why it needs to happen? Because in the end of the day, it doesn't.
Yeah. Well, yeah, and yeah, you can. My problem is that I lost faith. Well, I lost the faith in the Fed a long time ago, but it was sealed by Janet Yellen and Powell back in 2022. It's like, yeah, and this inflation, don't worry about it, it's transitory. That was the most boneheaded thing I've ever seen. I mean, to be honest, anyone with any kind of brain, there was too much debt. This problem existed before COVID, right? It was 2018. I was screaming about 30-year negative German bond yields. It's like, what are you people doing? This is insanity. You had a negative mortgage rate in Denmark. You could get a negative mortgage in Denmark. So the rules of finance went off the road back in 2018. And then, okay, we're going to have. We had the repo crisis in the U.S. in September 2019. And then Powell just said, okay, well, we'll start cutting rates again. And then you had COVID. And it's like, okay, once that happened, the rules of the universe, like, basically throw them out the window. It was basically like insanity rules. So we've been basically playing a pantomime since March 2020. It's like there was no way we're ever going to get back to normal with the amount of stimulus that was thrown in. And that was super inflationary. So to think it was a transitory move, yeah, I mean, you can make apologetic comments. Well, oh, we didn't anticipate the supply chain being disrupted for so long, or this is, blah blah blah. It's like the other argument was in 2008 when all the liquidity was injected, it was just captive in the banking system. It was just a subsidy for the banks, and they were able to make massive cash off that. But back in 2022, the stimulus was going to Main Street, and that's Main Street caused this inflation. People buying Pelotons, people wasting their money on meme stocks and trading in their parents' basements, whatever, blah blah blah. So they find an excuse saying, yeah, we didn't anticipate this. But the fact is that even if it had been captive in the financial system, there would have been leakages. There was just the size of the stimulus was too huge. So anyway, inflation's come down, but there's a lot of reasons to suspect that it may creep up again. And this is where I have my issue with, like, China's a huge deflationary force. But you look at oil. Oil has traditionally been the biggest source of price increases because of energy costs. Energy feeds into everything, and energy, the supply chain disrupted and high energy costs was the biggest problem for inflation 2 years ago. So energy, interestingly enough, since the Ukraine war started, has found it difficult to keep a bid. Like, so Saudi Arabia and Russia announced supply cuts. Yeah, oil pops up a bit and then drops. And it's like, oh, 2 or 3 weeks ago, I've been having fun with this one. Libya has domestic issues. Oh, we're shutting off all supply. You get some Fitchwick guys going, oh, this will be the ruin of Japan. Oil's going to $200. Oil goes up from, like, WTI goes from 76 to 78. And a week later, it's at 69. So no, what's happening here is, I think, two forces. Again, the market is looking at things like China and Japan and saying this is a deflationary event happening. Demand's going to drop, so we don't care about supply issues right now. The other issue is that I think the U.S. and others are encouraging the market to short crude to keep oil prices low, so that Russia doesn't get revenue from it. And you look at the U.S. is not the strategic oil reserve has not been replenished. Why is that? Like, normally, if it goes low and they start using some of it, then they try to replenish it. Now, either they're trying to be market savvy and trying to call a bottom or whatever they think crude is going to go at, but they're not buying any. So between that and this seems to be a massive short in the oil futures market, oil is not going up. So that has been a big reason why inflation has come down enough for the Fed to cut rates. So you can get all conspiracy theory here and say this is a big orchestrated Fugazi scheme that, oil is being kept low so the Fed can cut rates so the banks can benefit. And I wouldn't call you nuts for that because I have my own suspicions that that's partly the case. So yeah, keep track of oil. But everyone that gets worried about these supply constraints, I've been watching them because it's part of my job. I need to know what oil's doing because it might influence the direction of the Canadian dollar. Well, I can tell you that oil hasn't been, having any good fun, and the Canadian dollar hasn't been having much fun because oil is not going up, even on these supply disruptions. And so, what does that tell me? It tells me either like when I was younger, supply disruptions were the only thing that moved oil. Oh, there's a rocket was fired in the Middle East. Oil's up $2. You can't tell me that you have like 2,000 pagers blowing up in Lebanon, and oil is up maybe $1, and it's probably more up on $1 just because rates are going down. So you look at commodities like gold and oil are going up when rates are going down. So oil's just following the commodity trend. So yeah, the oil is very important in terms of what inflation is going to happen, and that's going to dictate whether we have a very aggressive Fed or just a normal Fed in terms of how fast it cuts rates.
Yeah, so one of the questions I wanted to talk to you about, I'm trying to think of the word this. So, one of the things with Feds cutting rates, obviously banks actually make less money with loans. And when it comes to housing, they were showing how it's gotten more expensive for these loans, and with the rates, even what they were, some banks were technically losing money on those loans. So, one of the things I wanted to talk about was, so if they lower the rates, they also had to raise deposits, the interest rates for the deposits. If a lot of these banks don't end up lowering those deposit rates fast enough, they end up actually losing money because, again, when they open these loans, they're actually losing less per loan. And one of the things that I've read before is that this can actually hurt middle class and lower class get those houses because they'll still go towards more, the more guaranteed, the firms, the people that are well off. So in the end of the day, the rates actually don't help the lower class and the middle class as much as they say, unless they go to the proper banks, I guess, that are offering basically nothing on deposits.
Yeah, so that's the big game with banks. In fact, in my day job, I see that I get like, hey, we're gonna offer you a great high interest savings account because you got a lot of money and we need we're expecting mortgage demand. So the whole deposits game varies from bank to bank. Some use it, some try to use secondary markets to get their funding. But the idea is that when rates are going down, you're right. It's like so we've got these loans. These people tend to want preset fixed rate loans. So they're going to basically lock in a rate, and if rates are going down, okay, well that's actually revenue enhancing because they've presumably locked in these rates at higher rates, and now they can refinance the funding at lower rates. If what banks do is again they tend to lend long and they're borrowing short through bank deposits. So that's the other side is they actually can make money on this. But the other issue is that trying to attract new deposits when rates are going down is challenging. And as you said, this is the bigger issue. It's really how do you finance mortgage demand when you can't get enough money in the door because your rates are too low. So you have to start restricting who you're going to give that money to in terms of mortgages. You want either you either want to focus on credit quality or you want to focus on profitability. So there's two sides to that. So you can either save all your capital for the higher risk clients. So you may have people with lower credit ratings getting teaser rates to get in, even if the bank is constrained in capital, they will favor that because they think it's more profitable. But it really does depend on the institution. But you're absolutely correct. Is the people that will not benefit much at all are the people in the middle that basically don't have not perfect credit. They have a mortgage or they can get a mortgage, but they can't get the best terms for the mortgage because the banks don't really care about them because they're not the most profitable and they're not the most creditworthy. So yeah, it's a big mix. And one thing, just a side point on all that. So in the U.S., we've talked about this before. The majority of mortgages in the U.S. Are 30-year fixed. So, and you do have the ability to refinance it if at least once if rates go lower. So what happens is you've got this golden period where 3 or 4 years ago, everyone was locking in their 30-year mortgages and laughing. I'm at 2.5%. I'm laughing. But what happens is that your job that you thought was, I work for Amazon. I'm laughing. I've got the job or whatever is 200,000 a year. I've got my house at 2.5. Oh, Amazon's cutting jobs. I can't remote work anymore. They want me to move to Boston. Well, I can't move to Boston because my job in Chicago, my house is at 2.5%. I'd have to sell my house in Chicago and then buy a house in Boston at a mortgage rate higher than what I'm currently getting. So you're trapped. You get laid off because you can't move. You can't go to what Amazon wants you to do, and so you're stuck to looking for a job, and you're stuck with this house with a great mortgage. But if you move, you're going to get screwed. So this is the biggest problem. It's a gilded cage. America's biggest advantage in the 20th century was mobility of labor, which is why the EU was created, because it wanted to replicate the US model. You wanted to have people in Germany being able to work in UK or Poland work in UK. And in the US, if you didn't like your job in Pittsburgh, but there was the same job in Tulsa, like, fuck, go to Tulsa and make twice as much. And that was the benefit. The U.S. economy, labor wages responded to price and supply and demand of labor, and it was a big advantage. It made the U.S. economy very efficient. But now, with everyone trapped in these mortgages, the labor mobility is stuck. So this is why this is different. This time it is different because a lot of people can't move easily like they used to, and so the economy isn't as dynamic as it used to be. And whether Powell has figured this into his equation or not, but this is the biggest problem. It's like people lose their jobs, but then you have immigrants coming in that don't have any mortgages, and it's like, yeah, I'll take that job. So you're seeing in the data where, and again, this is all gets into electioneering stuff, but a lot of the new jobs being created are being taken by immigrants, and people with existing jobs lost their job. They can't get a new job because they don't have the mobility. So this is a real issue that not a lot of people are talking about, and they should, because it is, my admiration of the U.S. economy as a student growing up was like, yeah, this is awesome. You have total mobility. You can go wherever you want in the U.S. That's changing, and not for the better.
No, and one of the things here also with this time with the housing market that's a huge problem. It's usually like it used to be like the price was too super high or interest rates. It wasn't both. But now you have the price is way too high along with the interest rates. So right now it's kind of bottoming out because now you're going to again have demand. But the problem is you haven't had supply for so long because all these construction workers and these construction companies, a lot of them went under because, like I was saying with my construction company, you do like 4 or 5 jobs, and then you wait to get you sell these other houses, get that other things, and then you continue to start new jobs. Well, people's houses were just sitting there. You'd make a couple houses and they wouldn't sell. So all of a sudden you'd already, exaggerate all your funds because you did 4 or 5 houses out because you wanted to keep your guys going. And then you're like, whatever, these will sell. Hopefully this will sell. None of them do. So by that time, either they're out of business or, supply is just going down, down, down. And then on top of that, 80% is currently locked in under 4. It was 4.5%, and then it was 73 was locked in under 3. So it's like there's a huge, 73% locked in under 3%. The supply's not coming back, even if you would have to lower it down back to 4%, for before they start to go, all right, with the price being the way it is and that 1%, I can make up the difference.
Yeah, exactly. And same issue in Canada. Same with there's just not enough housing stock, and we've had population is 39 million going to 40 million in a year. Well, that's 1 million people in 1 year, and there's no way that the housing stock can cope with that. And I just like shake my head at politicians that didn't even think about this. So we have an issue where there's not enough housing stock. Lower rates. And they just enacted a thing where you can now get a 30-year mortgage, and your whatever the mortgage insurability went from maximum 1 million to 1.5 million. So it's a lot easier for new home buyers to buy a house. But there's not enough new houses being created. It's just stupid. It's like this is not dealing with the supply issue. It's just you're basically juicing up the market, and that's what you're talking about with the rate cuts. It's the same issue. Canada is also cutting rates and juicing up for first-time home buyers, but the supply issue is not being dealt with because, again, the construction workers are not in the right spot, or there's not enough of them, not enough have been trained. The market's too cyclical, so you don't have consistency in terms of number of units being built, and so yeah, it's going to lead to price pressures in housing. Yeah, that's
well, sorry, but see. You've led on to my point that I've been going on forever, and this is the problem with government, and this is what they don't want the population to figure out. So, whenever there's issues in the economy, what do? Well, they do something to where they cut this, they do that, they cut the price side, but it doesn't ever help the supply side. Well, if they ended up actually looking at it the other way around and going, all right, let's help the supply side. Well, what would that do? That would help stimulate the economy, but it would help make the middle class richer, because what you would do is say, all right, for like housing market, perfect example. All they need to do is go, all right, instead of making, so like I said, I don't care who people vote for, but like one of the parties wants to do for first-time home buyers, I'm going to give you like a $20,000 match credit or whatever. Okay, well now you're just adding more demand for people that still can't afford it. Well, what you should be doing is saying, I'm going to give, if you are a construction company, I am going to give you $50,000 tax credit, something like that. You know what I mean? Or like a stimulus to where you can keep your employees in line, you can build more houses, create supply. And then the price would go down to where people could afford it. The price could have finally started dropping even with the high rates. But the fact was, they were going up at the same time. Nobody was addressing the supply issue. It just got worse and worse and worse. And they do that with everything. And it's always raise the price.
I'm going to add some conspiracy theory here. So, why is there the reluctance to increase supply? Well, who's buying up the single unit housing? Is that BlackRock? Is that all these large firms are buying up housing units in the U.S. So that's driving up the price, and the last thing they want is more supply. Well, they probably supply in areas they don't have enough already. But I mean, yeah, like I feel there's a very likely institutional component to this, where that policy makers will be encouraged to increase the affordability from the demand side as opposed to increase the supply side. It's like it seems obvious to me, and obviously you, it's like supply is the issue here, and yet it's being ignored. And there has to be a reason for that, and it's not just stupidity. There has to be a monetary incentive for policymakers to limit supply when it benefits certain institutions.
Well, yeah, exactly, because like you said, it's like they only look at it as like, oh, well, let's just do the price side. But then when you just create more demand, you're always going to offset it. So what are you really doing in the end of the day? You're just shooting yourself in the foot over and over and over. And on that note, if you're listening right now, whatever you're doing, stop for 1 second and look at the screen. Look at these charts, and I want you to understand this is the problem right here. They know that your children can't vote. So what they're going to do is destroy your children's life, because the parents at that time can vote, and the parents have needs, they have struggles. They think, hey, we need a house. Well, we need a house. Well, I'll give you lower rates. Okay, well, that's putting a Band-Aid on an open wound that's not going to heal. That's infected. You're just putting a Band-Aid on it. The infection's still going to spread. But look at this chart here. Shares of U.S. people who are 30 years old who live on their own. The source is on the bottom. I went on their website. They're all there. That's why I'm showing this. This guy just had them pieced together. They're not like that on the website. I didn't want to keep going up and down and back and forth between tabs. But if you say, it says live on their own. In 1983, over 80% of 30-year-olds lived on their own because it was affordable. Have ever been married? Almost 80% in 1983. Why? Because they could afford to and were happy. Live with children. 1983 had almost 60%. You're down almost now to 30% because who the fuck can afford children at this point? Own a home. In 1983, almost 50% of people who were 30 years old had a house. Now you're down to almost 30% because what do? They always push it down, kick it down the road, kick the can down the road, cause inflation, cause all these problems, and then instead of fixing the problem, which is 99% of the time supply, because what's happening? When you do what they're doing, you just attack the demand side, you start killing the supply, because what happens is all of these smaller companies, all these medium-sized companies can't stay in business because not enough people can afford it. Now your supply is weakening, and weakening. So how much you're offsetting the dollar on the front end, you're actually raising it on the back end because you're killing off the people who are creating the supply. And that is what the problem is in the United States. And all they worry about is election time. I need your vote. Let's kill their children off. Let's make it so none of their children can even think about having the American dream. Look at these charts. Look at these charts. That is baffling.
And it's a sad indictment of the U.S. political system. It's very depressing actually to look at that, and I don't know how fast it can be averted, but it's black and white here. This is not a good story. And I have told many people in Canada, it's like, yeah, like the issue is new people are not going to be able to afford people coming into the country with resources from outside are able to buy these houses, but younger children in the U.S. or in Canada, they can't even get, like, kids 18 can't even get a part-time job at McDonald's anymore because immigrants are taking it. And I don't want to be immigrant bashing here, but it is the fact of the matter that this is the youth unemployment in Canada is over 25%. I think it's horrendous. So if they can't get established in a job early on, and even a part-time job or whatever entry-level job, if they can't get an entry-level job easily, then how are they ever going to participate in the economy? It's like, there's all this social media shit about guys living with their parents and playing Call of Duty. Well, you look at this and you got to wonder, maybe they've got a point. Why bother? Why try to have a relationship? You can't afford to have kids. This has got to change. And this, if I had any influence with RFK, and I don't know if I do, but if Trump gets elected, I mean, this is the stuff that needs to be thought about. I don't even know what the Democrats think about this, but it's horrendous. It's just disgusting. And it's not a trend that's going to reverse quickly.
No, and it's like, well, that's the thing. It's like now, and you're reducing your I mean, there's so much. There's other factors, of course, like I mean, the OnlyFans. I don't know if you saw that stat, but OnlyFans total generated more than NBA players. That's unbelievable.
I guess, and I don't even sound facetious here, but a lot of people are probably saying, "Thank God for porn." So
yeah, pretty much.
God, no, yeah. These things just, you see them and you like. I struggle to stay optimistic some days. I know we said I've had some space calls with you where I basically said, yeah, that we're kind of fucked. Excuse the language, but it really, this kind of chart just reinforces that. It's like it's not being paid attention to, and if they always say, oh, our children are our future, well, the future's looking pretty damn bleak, guys, and you need to do something about it.
Well, yeah, if they're a future, why are you destroying them at every chance you can? Shouldn't you? If they're the future, the number one thing you can do is fix the debt problem. And see, this is the thing. This is why our government's sad. So this is one of the reasons that I also thought about. So with that 7.6 trillion, because you did make a good point. If we lower rates, but we're still higher than everybody else, the demand will still be there. So one of the things I thought was, you can't lower defense budget, correct? You can't lower Social Security budget. You can't lower those top things. So the only way you can lower your
without losing power, yeah.
Yeah, so the only thing you can do is say, all right, our next biggest expense is debt, but we can't pay it down. But what we can do is make it so where we pay less on the upcoming renewal, because if we hit this upcoming renewal of 7.6, also they were looking at going to 1.5 trillion. I had it calculated to.
Yeah, and that's the game. That's my primary reason for believing why the Fed's cutting is they need to get 10-year back to like 2.5%. If they can do that, then they buy.
Speaking of tenure, sorry to cut you off. Speaking of tenure, I'm glad you brought that up. So if you're looking at my screen right now, I was going to bring this up earlier. Right after the rate cut, Rates actually got worse for the 10-year and it went up. What do you
Yeah,
thought?
yeah. Well, that's just profit taking, right? This market was, like I said, there was at one point there was 150 basis points priced in for December. It's not that much. It's like 130 now. So there was, or well, what 80, whatever the after the 50 basis point cut. So this is basically there. The market was super long bond futures, and just you take some profit after the fact. So you buy the rumor, sell the fact. They successfully badgered the Fed into cutting by 50. And again, a lot of people only thought they're going to go by 25. So the guys that went 25 were probably happy to sell these guys bond futures, and so the guys that thought 25 got nuked, and so the guys that thought 50 made money, and then they took profit. So that's why the yield went back up. But the overall trend is still lower.
No, great, great explanation. Thank you. I appreciate that because yeah, I did see on all the banks, everybody but J.P. Morgan bet 25.
Yeah, yeah, exactly. And so this is, I need to point this out. People were asking me this yesterday and today. So this is an unusual Fed meeting that just happened because normally the Fed is pretty transparent, has been transparent about what they're planning to do. It's like, yeah, we're going to cut. Okay, well, and normally what happens is the market's saying, well, 50-25, 50-25, and then the Fed is in what they have what's called a blackout period. So 2 weeks before the meeting, they can't really say anything. But in the past, they've some guy called up a guy at the Wall Street Journal, and he's this the Fed whisperer, whatever you want to call it, or some other news agency who's friendly to the Fed and is known to convey the Fed unofficial and news. So a guy at the Wall Street Journal will write an article saying, yeah, the Fed's leaning towards 25, and that will basically self-correct the market before the meeting. But this time there was no transmission mechanism whatsoever. Jay Powell basically was radio silent. There was no special friend, talking what the Fed's going to do. So the market was completely on the fence here, 50-50. So half the market was going to lose and half the market was going to win. So this is a very unusual meeting that just happened. And as I said, it's not surprising that some guys took profit. And, whoever made profit, someone got hurt. So it wasn't a fun day for some people. It was a great day for others.
Well, it's funny how J.P. Morgan's the only one who won. Crazy.
Yeah.
Fucking always J.P. Morgan. But yeah. I just when I saw this chart, I'm like, if anyone ever had faith in a government, if anybody ever had faith in a party, whether it was red or blue, I would show them this chart and say, look at all the times your color was in charge. Guess what? The chart still fucking dropped.
Yeah, and here's again, I don't want to get into the politics of it, but and it is a demographic issue as well in all industrialized countries, Canada and U.S. Canada worse than U.S. And so we've had the massive immigration. What immigration will do is, again, these people come in where they may or may not have resources, but they're competing for that housing stock. They're also competing for those jobs. So ultimately, if they're better situated than the people actually already living, you'll have displacement where the immigrants will basically you're going to have what's called a maybe they climatize and they blend in the culture, maybe they don't, but you're when you have not enough young people having kids, well, that creates a demographic problem, and that's what immigration is designed to counter. It invariably will change the culture of your country for better or worse, and we don't know. As I pointed out to someone, I don't know what Canada is going to look like in 50 years because I'll be dead most likely. Well, I will be dead. I don't expect to live that long, but the culture will change, and you just have to sort of accept that. So I always you look at these pictures of what's going on in Europe, and it's like Germany's now creating immigration controls again. It's like, yeah, it's going to happen, but when you have unchecked immigration, it happens way too quickly, and that's why I think a lot of these political stories are cropping up on Twitter. It's just too much. Too much focus on immigrants, and let's create the negative image of people eating and cats and people's pets, and that's disgusting. But that's the sort of I do believe there are agents at work, whether they're Russian or whatever, that are using all these hot bottom issues to try and antagonize the public. So this election is more divisive than any other U.S. election I've ever seen, because I do believe that people are exploiting these issues in the U.S. psyche to try and get people at each other's throats. Again, it's like this is a big issue that if you're not having enough kids, and you're not able to afford a house, and you're trying 2 jobs to eat. And then you have competition coming in, making it even worse. Again, that's a politically divisive issue. So
No, yeah, and that's the thing. I feel like now this year, just more people are waking up, and that's the thing of how he said. Eventually, here's what's going to happen: either they're going to have to let a MOAS type situation happen to stimulate the economy, or too many people are eventually going to say, "I'm working 2 jobs. Why can't I still feed my family? Why did I just lose my house working 2 jobs when my wife is working one too? What is going on? Why do these bankers say, oh, it's a selective recession, not a recession? Rich people are just fine. Why can nobody own a house? Eventually, too many people start to ask the questions, and I feel like that's what's starting to happen this election
oh yeah,
compared to any other in history before.
yeah, absolutely, and that's a great point. And we've talked about this in previous calls. It's like if you pissed off enough people, a lot of it, people for no fault of their own lose their job, and it's like, yeah, working 2 jobs and I'm not feeling any better off. That has political consequences, whether it's within the system or outside the system. At some point, you cannot have a majority of people feeling like they've been screwed over. I do believe that's what's going on in the U.S. and it, to me, yeah, again, I can't really want to get into the politics of it, but it's very distasteful what I see on Twitter and stuff, and where things are going, and it just makes me kind of sick to my stomach. But ultimately, you fuck around, you fool around, you fuck around, you find out. And I do believe not just the U.S. but many economies, Canada included, are going to find out the hard way that you can't impoverish the majority of citizenship without some consequence.
No, I agree, especially in a free country, especially when they're finding out you're getting all these loopholes, doing all this thing. You've paid how much in fines. Eventually, people go, how much was derivatives? Eventually, people start asking the right questions, just like they did in that interview with Jay Powell at the end. And like I said, they had him like just running, like he had no idea what to say. He was baffled about the questions they were asking. It was sweet to see. But that's the
Yeah.
thing with politics. Like, if they cared, like I said, to fix the housing crisis, to actually fix the housing crisis, it's very simple. You would put into law that institutions are only allowed to own XXX amount of money, worth of properties on the open market at a time. It would
Yeah.
encourage them to sell the properties maybe at a discount, blah, 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 because they could see a property, hey, if I buy this property, I can make more on this one. I'll sell this one just to get off my hands because I've reached this limit. On top of that, now you have less buyers, you're lowering demand, you're creating supply, and then what you do is you would again just give the stimulus type of thing to construction companies quick, just for like a year or two right away, and then next thing you notice, guess what? Well, that stimulates your economy. You now have people buying. You now have banks gaining more money because again, you now have more going for loans. You have competing, more competition for those loans. So those banks are feeling good. Like you said, on top of that, now if you have people competing for loans, what that would do is encourage them to switch banks to your bank because now they got their home loan there. It's convenient. You might give a better percentage now. You know what I mean?
Yeah.
It's a
No,
continuous. If you did it that way, it'd be a continuous positive, positive, positive. But instead, it's attack the supply or attack the price. Like I said, it's so simple that eventually people will
Yep.
see it.
Yep. No. Um, as yeah, have I don't know if we're going back to gold. I do have a pet peeve I've got to get out, but I don't know what else you wanted to ask about.
Yeah, I just got one more thing here. I don't know if you saw this new rule, but the SEC just on the 18th, so yesterday, just brought up this rule, and this is the last thing I wanted to go over. But what are your thoughts on this rule? Because I believe that it's going to be used for spoofing, a lot easier for them to do price anchoring, things of that nature. But what they're doing is SEC is now votes to allow half penny stock pricing in between the nbbo.
Yeah, I'm trying to figure out, like, this is like, opening the door, closing the door after the cows have left or whatever. I used interactive brokers the last few years, and I remember seeing half penny pricing already. So I'm not really sure if this is just validating a practice that was already going on. So yeah, it just said it anything that's helpful for Wall Street is probably not good for retail. So I have to read more. I know David Lohr was posting about it yesterday. I didn't get a chance to read his comments, other than there were some changes he was hoping for that didn't happen. So I'm not entirely enthused by this particular rule change. That I'm not really. Yeah, it wasn't about.
I just feel like it's just going to be used for nothing but nefarious activities. And then, like, this is the thing that sucks, is every time they bring up these stupid rules, it's to create more competitive pricing. Well, competitive pricing just means that they can anchor it lower. You know what exactly like I just said. Competitive pricing. Yeah. Bring more liquidity. We'll get more people buying into stocks if it's a half a penny less instead of a whole penny less. No, you won't. No one in the world's like, God, if this was just a half a fucking penny less, I would buy it then. And that's
I can sort of extrapolate from what I saw in trading FX. So when you trade FX, it used to be like 4 decimal thing or something, like, all of a sudden, like, I can't remember exactly, 10, 15 years ago, all of a sudden I started noticing on my electronic broker, oh, it's now 5 decimals. So you're getting this extra decimal in just because like, they call it a pip. So like 1 pip on a million is about $100. So, but now half a pip is like 50 like, if you do it another decimal, like, well, that's another $10. So if your spread is an extra, what are 0.0005, that's $50 extra that someone can make or lose. So I don't know. My experience is that, did it make a difference? Did it try me to trade more? Not really. It made me more aggressive in searching out the best price. It's like, oh, this guy's got it one, what are 5 bases, like, instead of 1 pip, it's like half a pip. Okay, well, that's $50 cheaper. Okay, I'll do that. But I don't know. I tend to side with you that I'm suspicious of any changes that on the pricing side, because it's really not going to help retail. I don't think retail is going to go pour into stock just because they can find a deal on unless they're like, again, it's a size issue. Retail's buying 100 shares, then a half cent won't matter. If they're buying 1 million shares, then a half cent matters. So
but retail's buying 1 million shares.
Yeah, so maybe Rory Kitty's happy, but most of us don't care. This would benefit institutional players more than retail, that's for sure.
Yeah, and like I said, I just feel like it's something they could do with spoofing and baiting the nbbo, because if you're doing the baiting constantly in between those two prices and never leaving the full cent, you could fucking pin it for quite a long time, I feel like.
Yeah.
You could pin it between the half a penny and then the penny. You could sit there and just keep pinning it between the half two bids so it never fucking moves.
Yeah, this whole thing is a bit of a sore point for me in terms of the whole spoofing thing, because, like, spoofing is illegal, right? Like JP Morgan got taken down for spoofing in gold and silver. So, but we see spoofing going on in AMC every day, and it's going on in GME, it's going on in Donald Trump.
Goldman Sachs does it by the second.
They do it every day, and it's like, this is so obvious. I was talking about it in 2021, and it's gotten worse. And Crystal Ball on whatever X is posting about it every day, and he's like angry that we're not talking about it. It's like, well, how many times can I talk about it? It's like the SEC, it's so freaking obvious. It's like, if they wanted to stop this, they have more than enough evidence. They got cats now; they can see it anyway. But it's like, spoofing is a big part of why these prices are basically stuck. And why is AMC not moving? Because it's being spoofed to death.
Spoofed, and then on top of that, you get fucking, every time we buy, it's like, well, there's like an artificial increase in shares because they can pull them out of the CNS and all these other things, right? 203 exemptions. Yeah, it's stupid.
Supply, yeah, like, let's instantaneously short it. Yeah, no, at some point the dynamics of it change. It's like, at some point someone's going to say, this doesn't make any sense. I'm going to buy like 100 million AMC shares. Well, there's only 400 million. Well, I don't care. I'm going to buy them all. And all of a sudden, the fake liquidity disappears and the AMC price goes up. But it's like, until that day happens, we're just stuck with this shit. And the SEC needs to get off their ass. And honestly, I don't think it ever was going to really happen. But I was promoting RFK because I was hopeful that maybe if their third-party candidate actually won, and he would have some interest in doing stuff like shaking up organizations like the SEC, and maybe I might be able to have some influence there. I don't believe that anymore, but that was my sort of thinking, was like, yeah, we can, there has to be change at the SEC. And getting rid of Gary Gensler will not do that. It'll just put in some other puppet. So there has like this spoofing is just absurd. It needs to go away, and there's no political will to do it.
No, and then the fact that you got fucking round lots and odd lots, and round lots will move the nbbo and attract it, but retail's odd lot won't. What the hell?
Yeah.
So yeah, it's just a joke. Oh, I did have one last thing because I did want to get your thoughts. I haven't talked to you about this yet. So the reproposal on the endgame rules, when they framed the head of the FDIC, I said they were going to make these new rules and they were going to be gutted, but I didn't think they were going to be gutted to this extent. Like, this is unbelievable. I don't know if you saw the new proposals, but banks, so basically medium and smaller banks, will go up to 9%, but banks with over 100 billion, basically none of the requirements apply to them, other than unrealized gains. I have it pulled up here. Other than so it says the reproposal increases capital requirements by 9% for global systematic important banks with assets of over 100 billion, but excludes non-CGIS banks except to require unrealized gains on security losses or regulatory capital.
Yeah.
And then
go
ahead.
No, I was just gonna say the entire, when 2008 happened, there was like, oh, our current bank capitalization rules are probably not sufficient. So there was this big push to go to Basel III. And Basel III was going to be very strict, and there were all kinds of new rules that were going to be adopted. One of them was, the value of collateral for things like gold, and it would have basically meant that physical gold was valued more than contract gold, and this would have screwed over the U.S. banks. So what you had is all the members of the London Bullion Association and the COMEX that were going to be impacted basically got exemptions to not have to deal with the weighting of gold properly as Basel III had recommended. And the same with these capital requirements. It's like this was designed to make sure that we don't have another 2008. And yet, like, that would be too cumbersome for our banks. It would hurt our profitability. It would limit our ability to respond to market conditions. So we can't adhere to this capital requirement. Okay, well, we'll relax it for you. The Fed just caved, and it's disgusting. But what it means is that, well, it just means that they're not going to have to be as strict in terms of the asset positioning. It will keep some of them around, because there was some. I don't think Bank of America could to exist under the proposed rules. And if you keep talking about the derivative exposure of these institutions, and that's part of it. It's like they've got to, if the netting is offsets most of the losses, okay. But even on a net amount, some of them are very large. And again, can you trust that some of these nettings are actually accurate? So the idea was you need to have enough capital so that if there's a problem with the netting agreements and that one of the counterparties has been mismeasured, then you have capital to withstand that. Well, now they won't. And so if there is an issue in the derivatives market, it will basically roll onto the financial system, and we'll have another crisis.
Just to cut you off though quick, Peter, I did show the stats for that a couple weeks ago, but they said that in the netting exposure, it was 34% that they realized was valued by the hedge funds at least at incorrect value.
Yeah, 34%. It's atrocious, right? And that tells you all you need to know. And again, it's like, I don't want to get into it, but like the market makers and all their, sold but not delivered, that includes all that stuff too. So it's a big black hole. And as long, again, it's kind of fake numbers. It's like there was a scandal, Bank of Montreal, about 10 years ago, 15 years ago, had a derivative scandal where they were basically paying data provider to provide incorrect volatility quotes so that their obligations, their liabilities were seemingly less than they actually were, and they got caught. BMO took like a $200 million hit. So these things are going to happen, and it just there's no. Every time you think, yeah, they're going to fix this hole, something like this happens where they basically say, yeah, it's too big a problem for us to address properly, so we're not going to force you to deal with the capital that really should be required to deal, because we know that these measurements are not accurate. And as you said, the 34% hedge fund incorrectly, that on how many trillions? I mean, God, yeah. Not a comforting story.
No, it's just unbelievable. I guess last thing is, you ever see us winning this, and then do you ever see it breaking at any point here?
Yeah, I mean, as I said, whether we have to have the entire system blow up, I don't know. I don't. A lot of people online say, yeah, we have to have everything go into fire. We've had incidents that look like that. Like Evergrande was like definitely a fire, like for Asia it was, for China it was. There's all kinds of regulations going on in China now where short selling is banned, and again, Price Waterhouse is going to get booted out. But China's a different system from us, and they don't tolerate people mucking up the works. Whereas in the U.S., the works get mucked up, it all gets hidden, and then the people that caused it get promoted. So, I am just being a little facetious, but I
No, you're
honestly
not.
think
Last
that.
week I showed that Jamie Dimon's bank got 5 felony charges, and what he ended up getting was a $50 million bonus because he settled all 5 out of court.
Yeah, there you go. Yeah, no, it's yeah. I do think, positively speaking, as you pointed out, more people are becoming aware. As more people become aware, the political pressure to fix some of this shit happens. And so I said, at some point, enough people are educated, enough people are pissed off, and some of these idiots in Washington that have been enjoying the gravy train will not get reelected, and maybe we'll have people that actually care. So that's the hope. And in Canada, we'll see what happens in Canada. Liberals just lost an important by-election in Montreal. Was the seat of the former prime minister, and now it's gone to the Bloc Québécois. So, the Liberals seem to be like untouchable for years since 2014, but now things are looking very grim for them. So, I think again, if you fuck around enough, eventually you'll pay the consequences. I do think there'll be change, and hopefully positive change, but it may have to get worse before it gets better. So.
Sounds good. Well, thank you, Peter. I got to get going here, but I always thank you for coming on. I always appreciate it.
Yeah, I just have one little point. So people are saying, central banks are buying gold. Why doesn't Canada own gold? I've said this many times now. So I worked at the Bank of Canada for 8 years. My first job at the Bank of Canada was looking at why Canada should hold or not hold gold. I worked with the assistant minister, like the assistant deputy governor that basically was on that file. Later, one of my friends, best friend actually at the Bank of Canada, was working on a file that basically said, yeah, we changed the way we hold reserves from a net asset position to an asset liability position, which means that every asset is borrowed with a liability. So when you do that, you cannot hold gold because you'd have to borrow the gold, and gold doesn't pay an interest rate. So it's very hard to say, yeah, we have it doesn't have a maturity term. It just sits there. It's not a good asset to have in an asset liability managed book. So until Canada moves back or away from an asset liability managed framework, they will not hold gold. And it's like, is this a good idea? And the people in Ottawa, to my knowledge, still think that, well, Canada is a huge resource country. We can just get gold out of the ground if we need it. So anyone that you see talking about how Canada's stupid for not owning gold, well, there's two sides to that coin. So anyway, anytime you have a question on gold, guys, ask me, because hey, as a listener of this call once said on Twitter or Reddit, I'm a gold bug weirdo. So anyway, I'll leave it at that.
Sounds good, man. Thank you. Appreciate the information as always. Have a good day, Peter.
Hey, have a good day.